So this is a chart of global net liquidity. I shared this on Twitter 2 days ago and pointed out a simple fact that it's the lowest it's been since June of 2020. Some people took this to mean that I was implying that this is bearish. And note, I didn't say anything like that in my post. I just stated a fact that it's the lowest it's been since June of 2020. There are some folks out there that feel this is actually bullish for the markets because they feel that global net liquidity can't go much lower and they're expecting a bounce here. So, and in their view and their interpretation, that's good for the markets. Generally speaking, I don't think that's a bad way to interpret liquidity charts. If you can establish some kind of a range where you feel it's likely to stay within, then that kind of gives you an idea of like, okay, we can't go much further down from here or much further up from here, right? A really naive view would just, do trend lines like this. And for example, this bottom one here, if you started to draw it after this bounce, well, that's not a very strong trend line because you only have one bounce. However, here it did happen to bounce again. Is that a coincidence? I don't know. Here it fell through. Some of that was due to the RRP spike at the end of the quarter. And it looks like it's coming above that. So far, this trend line may start to take on some meaning. But a lot of people out there don't want to rely on TA. So to have a better understanding of the boundedness of this chart, you want to start to look at the individual components. And this is the formula down here. And so you want to dive into each of these and either do the analysis yourself or go to different folks online who talk about these and get develop your own thesis around where these components will move and then get an idea of how the overall chart will move. So the first one and the big one is the Fed balance sheet assets, WALCL. That's an easy one. It's just going to keep on going down, assuming there's no big changes. Occasionally, you'll get a spike like this. This was during the banking crisis. Yes, that's a wild card situation. Anytime there's a weird crisis, the Fed loves to solve it by increasing the balance sheet through doing some kind of stimulus. And so, sure, we can experience one of those at any point. But if that doesn't happen, as far as extrapolating out, yeah, we know the rate at which this declines. So that's an easy one. It's just going to keep on dropping. So in this expression, we have the U.S. central bank assets, got Japanese assets, China assets, ECB assets, and then we have RRP, reverse repo, and then the TGA. So let's skip these other central banks for now. Let's talk about the RRP and the TGA. As most people realize by now, the RRP has dropped massively, but it's kind of been going sideways for a few months now. These little red marks are some of the outstanding or notable end of quarter spikes that the RRP experiences. And some of these are end of month as well. There's really smart people on Twitter who have years of experience who have differing opinions on what's going to happen to the RRP. There are some folks who say, yep, it's just going to keep on draining, and which is good for them, good for liquidity. And other people say, nope, it could increase. So really, you just got to do your own analysis, decide who you agree with, and that will tell you, or at least you'll then have a view on whether or not which way RRP is going to go. Is it going to drain soon? Is it not? Etc. Here's one tip around projecting out whether, or behind one of the factors around the movement of the RRP. If you go to this site, darwintech.dev/Fed net liquidity, you'll get a dashboard. And if you go down to Treasury securities net issuance, you'll get this chart. I'm going to expand it full screen. I'm going to isolate just the bills, and I'm going to zoom in to this section here. This big negative spike here, that's maturing securities, so that's in the future. We don't need to worry about that, but I'm just going to focus on this section here, and I'll zoom in a little more. So we're looking at net issuance for bills. When it's heavily positive, that tends to eat away at the RRP. So money is moving out of the RRP and into bills. And when it's negative, it's a little bit of pressure the opposite direction. So that can give you some idea of what's going to happen with the RRP. So just for example, if it's telegraphed and announced that the Treasury, Janet Yellen announces that, oh, we're going to be doing massive bills issuance like what happened here and all these months, then you can expect that the RP may start to aggressively drop. So going back to the global net liquidity chart, let's look at TGA, this component right here. This is actually on TradingView. Sorry, I had some old lines on the screen that weren't really relevant to this presentation. But anyway, it is available on TradingView. The problem is that it's the weekly value, so it's just you're not going to get the daily update on TradingView. If you want the daily update, again, you can go to the same Fed Net Liquidity dashboard, and there's various charts on here. For example, we can do the bar chart. I'm going to maximize this one, and I'm going to isolate it down to just the TGA by double-clicking on that. Now that we've got just that, I can zoom in to get a better idea of what's going on there. So there's a few accounts on Twitter that do pretty good analysis on the TGA, and these folks they'll often have their idea of like what's the lowest it can go during a quarter, what's the highest it can go during a quarter, and even just watching it, you can just visually see like, you know, since back here, you know, the lowest it's gone is about, you know, it's never dropped below. Let's call it, you know, 600 billion. This is this line right here. It's obviously never gotten that far. So I zoomed in a little more to get a more precise view of the range. So let's call it 650 billion to 950 billion. And you'll see various folks out there give, like I say, their estimates like, oh, it shouldn't go much higher than this or shouldn't go much lower than this. And that gives you an idea of how the TGA is range bound. So basically, some of these folks would say if when the TGA is really low here, can't go much lower, therefore it's likely to fill from there. That's bad for liquidity. Vice versa, if it's filled up like to here, it's like, oh, it's not likely to fill up much more. And so, for example, when it drops from here to here, that's good for liquidity. So that's one of the ways to read this component. Like I say, you can also take a look at other folks' analysis, and sometimes they'll tell you what direction they think this is going to move. So going back to the GNL chart, that covers what would be called Fed Net Liquidity. So U.S. balance sheet, RRP, TGA. Next, we've got the three other central banks. And if you notice these, each of them is actually, it's the same format. It's the assets of the central bank, and then we convert it to USD by using the currency symbol, the corresponding currency symbol. So here's the Japan central bank assets. You can see it's just been steadily climbing except for this exception right here. Unlike the US Fed balance sheet, on here, we only get an update once a month. So the Fed balance sheet, we get an update once a week. This one, once a month. So this is the assets, and it's in terms of JPY. If we were to look at the component the way it is on GNL, let's go look to that real quick. I'm going to switch back to the week. We use this currency symbol to convert. So if we look at this entire expression, we get a very different picture, which is right here. So this is the Japanese assets converted back into USD. And so as you can see, it's been on quite the decline because of the currency component that we have there. So that's JPY USD. And obviously, so when we take this and multiply it times the Japan assets, that's why it's such a, you know, the chart's in such a downfall there. All right, next in GNL, we've got the China Central Bank. So if we go to the China Central Bank assets, it too was also kind of more or less an uptrend, and over the last few, actually let me switch to month here. Last few months there was a bit of a pullback. Some people have said this has something to do with the pullback in the China market recently. But in the same way as we did for Japan, we can look at the central bank assets, when we can also switch to the component with the when we multiply by the currency component. So again, we get a little bit of a different chart there. And finally, we have the ECB assets, so central bank assets for Euro area. Again, generally in a downtrend. And if we include the currency multiplier, we more or less get the same thing. Implicit in each of these currencies is the dollar, so you can look at the DXY for that. So basically, when you're trying to understand this chart and you're trying to understand what are the moves, you know, just take the time to look at the individual components and really dissect the movement by looking at, you know, what has moved a lot recently in each of these. I'm not encouraging you to use TA. I just draw these lines as just kind of milestone markers, just for reference, really. I definitely encourage you to, like I say, do the analysis on the underlying components and kind of go from there.